Okay, so what are sales and use taxes and why is that important to consider for the business? Well, if you sell goods within a state, that state may put a sales tax on the sale of those goods, and that sales tax is paid by the purchaser or the customer. And it is collected by the merchant, the individual selling those goods, and transmitted to the state as such. Some states do not have sales taxes. Well, I think actually most states have a sales tax, but you'll have to check your local state rules to see if there is a sales tax. And the sales tax rate changes from state to state. Generally, it's somewhere between 4 and 8% of the value of the goods sold, and there'll be additional taxes sometimes for certain items like alcohol, firearms, tobacco, things like that, or luxury goods will have a higher sales tax on it. And there will also be local sales taxes sometimes as well, which you'll have to, again, collect that money and send that to the locality, or it could be that you designate the locality, you send it to the State Department of Revenue, and then it goes back to the locality from the Department of Revenue, so it makes the reporting process easier. So that's sales tax, right? And you generally have to get a state sales tax identification number if you're a merchant selling these goods, and you have to collect sales tax for these goods. So just like the employer identification number, you go to the State Department of Revenue, and there's a form and procedure in place for you to get a sales tax identification number. This sales tax ID number will also be important for ordering merchandise that you're going to resell, because it will exempt you from sales tax from purchasing those goods, right? So you get that exemption there because you're not the ultimate end consumer, right? So it's only the end consumer or purchaser that pays the sales tax on those goods. And then there's a related concept called use tax. Now, we just talked about the context of you buying goods for resale. Well, in some cases, you may purchase equipment, etc., goods to use within the business. Now, if you're the consumer, use it within the business, you will likely have to pay sales tax on those items. So say you go out of state and you purchase a vehicle, and the sales tax rate for the vehicle is 6%, where in your current state it was 7%, and you bring that piece of equipment back to the state and use it in that state to carry on that activity. Well, in that case, the state will say, well, you avoided paying our sales tax percentage and went to another state. In order to disincentivize or remove the incentive to do that, we will charge you the difference. So you'll have a 1% obligation to your local state to make up the difference between the sales tax rates between the state. So that's called use tax, when you purchase something out of state at a lower sales tax rate to use in business in this state. You're supposed to pay the use tax to the state. Now, a popular issue now that has come up has been internet sales, etc. Do you have to charge a sales tax on internet sales? Generally, the question is determined by whether you have a significant presence in the state where you made the sale. Okay, if you have sales agents, a place of business, you're registered to do business there, distribution outlets, anything like that in a state, if you earn revenue by selling a good there, then you have enough presence in the state that state can charge you sales tax. But if you're like lots of internet companies where you simply take the order online and then you ship that order to the consumer in another state, where you don't have a significant presence in that state, so you're not subject to sales tax. Now, different states have different rules on that, but again, the backdrop is you have to have minimum contacts, minimum business operations, or some form of minimum contacts with the state where it is constitutionally justifiable for that state to impose a tax on the sale of your good within that state. Amazon is the largest example where it is running into that in many states, where it is developing distribution centers within the state where it previously had no physical presence or very little physical presence, and by developing those distribution sites, they now have to charge sales tax to consumers in that state. Now, lots of states grant a specific exemption for certain online retailers that say, okay, we are exempting you any sales you do not have to charge sales tax on, even though you do have physical presence in the state. Now, that is just a product of bargaining power by the organization, but generally for your startup business, if you have a physical presence in that state, you will need to have a method in place to charge sales tax to the customers who purchase your products. Okay. On a related note, if you provide services, you do not charge sales tax on services. Okay. If there are the transfer or sale of goods incidental to the services, if you're not making any profit on that, you may not qualify to have to collect a sales tax on that. But if you're making any form of profit for the sale of goods along with your services, yes, then again, you would need a sales tax identification number, and you would need to collect the sales tax from the individual purchasing the goods. Okay?